next important concept that we are going to discuss here is regarding accounting equation. So what is basically accounting equation is? Sir, as per the accounting equation concept, the assets of your business is always equal to liability plus capital of your business. So whatever assets you are having, for example, you are having 5 lakh rupees of assets. So your assets are always equal to whatever liabilities and whatever capital that you are having, right? That is the accounting equation method, or you can say accounting equation concept. So we have to first of all understand here how accounting equation concept works and how it will be useful or how it is important for doing or for preparation of your financial statements as well as your financial report. It's a basic concept, right? So accounting equation, as per the equation form, it's nothing but asset is equal to your liabilities plus your capital, right? So now, sir, in order to understand this accounting equation and how it used, first of all, we have to understand here rules of debit and credit, right? So these rules of debit and credit, it's based on your accounts that we studied related to modern approach and traditional approach, right? Now, so basically we are considering here the modern approach of accounting, that is asset, liabilities, right? Expenses, income and capital. Basically, when we are talking about asset, so asset is always having a debit balance, right? Asset is known as debit, sir. Liability, when we are talking about liability, so liability is always having a credit balance, or it is known as credit, right? Asset is debit, liability is credit. Then, so what about income and expenses? So income is always having a credit balance, so income is credit. So next is expenses. So what is expenses basically? So expenses is always having a debit balance, so expenses is a debit, right? And not least, at the end, we have to discuss here about capital. So what is capital basically? Now capital. So capital is having a credit balance always, and that we have to consider as a capital as a credit, right? So asset means debit, liability means credit, capital means credit, then your income means credit, and your expenses means debit. So that we have to understand first of all. Now, suppose I'm saying asset get increase, right? If asset get increase, so what does it mean? We have to debit it or we have to credit it. So whenever we are saying asset increase, so asset increase is nothing but debit. As you might aware about maths rule, right? So maths rule is plus is equal to plus, right? So there is rule in maths, plus is equal to plus. Similarly, so we are having rule in accounts. If asset is a debit, and you are saying so asset get increase. So for example, you are having 50,000 rupees of furniture with you, and you purchase another 50,000 rupees of furniture. So now with you are having 1 lakh rupees of furniture. It means your asset get increase, right? So asset itself is having a debit balance, and if you are having another asset with you, so that also you have to debit. So debit will get plus, right? Debit get will plus. So whenever asset get increase, we have to debit it. Then, so next is liability. So what about liability? So as we know, liability means credit. So when liability get increase, what we have to do? So we have to credit the same. So same rule we have to apply here that we are having in maths. For example, so in maths we know minus is equal to plus. Similarly, sir, if I'm saying liability means credit, and if any liability get increases, so what we have to do? So we have to credit the same, right? So credit is equal to plus, right? Credit will get increase. Then next is your owner's equity, or you can say capital. As we discussed, so owner's equity or capital is also having which balance, sir? Is also having a credit balance. So that is again, I can say maths rule of minus is equal to plus. It will get increase. So if you have introduced at the start of the business, you introduce a 50,000 rupees of capital, right? You're running starting a small business. You have invested 50,000 rupees into it, and so after one period of time, or after 1 year of period of time, you invested another 1 lakh rupees into the business, right? That is the additional capital. So now your total capital will be 1,50,000 rupees, right? So capital is a liability. It shows a credit balance, and whenever you want to increase any liability, or whenever you want to increase a capital, so we have to credit the same, right? The next is revenue, or you can say it's income. So income shows which balance? So income shows a credit balance, right? Income always shows credit balance. Income means credit. So if income get increases, so what we have to do? So if income get increases, we have to credit, and if income get decreases, then but obviously we have to debit. That we have to discuss further. So here revenue, that is nothing but income. Income shows credit balance, right? A credit balance, for example, as per the maths rule, minus minus is equal to plus. So whenever I'm saying my income get increases, so it means I have to credit the same, right? Then next is your expenses. So expenses shows which balance? So expenses shows a debit balance. And sir, in accounts, debit always get increase, or always get increase or plus, right? So if I'm saying, so my expenses get increase, what I need to do? So if I'm saying my expenses get increase, I need to debit the same, because debit will get increase, right? So I need to debit the same. Right? So these are the rules of debit and credit. And further move into this, we have to see regarding decrease in the assets, decrease in the liability, decrease in income, decrease in capital, and decrease in expenses as well, right? So when we understand here is regarding increase. If asset increases, then what we have to do? So we have to debit it. Then if the liability get increases, what we have to do? So we have to credit the same. If income get increased, what we have to do? So if income get increased, we have to debit the same. We have to credit the same. And if the expenses get increased, so we have to debit the same. If capital get increased, so we have to credit the same. That we discuss here, right? But sir, exactly opposite thing will also happen, no? It means the asset, expenses, income, your capital will get decreased as well. So in that case, what we have to do? What we have to do regarding debit and credit? So rule of debit and credit we have to see for that as well. So as we discussed, asset is debit. If it increases, we have to debit the same. And so if it decreases, then, but obviously if it is decreases, so we have to credit. Simple. Then, so we discuss liability means what? So liability means credit. If it increases, so we have to credit. And if it is decreases, so we have to debit it. Simple. Then, so we discuss owner's equity or capital is your liability. It is having a credit balance, right? It is having a credit balance. So if a capital get increases, so we have to credit the same. And if it is decreases, then so if it is decreases, we have to debit it. So revenue or income. Revenue income is always having, so it's always having a credit balance, right? So whenever income get increased, we have to credit it. And if income get decreased, so we have to debit the same, right? So what about expenses? So expenses itself is having a debit balance. Expenses itself is having a debit balance. So whenever expenses get increased, so we have to debit the same. And if it is decreased, so we have to credit the same, right? We have to credit the same. Now we have to see question on accounting equation. So we understand what is accounting equation here is. So accounting equation is nothing but asset is equal to capital plus your liabilities, right? So whenever you are having 50 lakh rupees of assets, so as per the accounting equation approach, your assets are always equal to your capital and liability. So here, this is the question. The position of the businessman on 30th June 2022 was as follows. Cash is rupees how much? So cash is 5,000. So first of all, we have to identify here cash is asset, capital or liability. So we know cash is asset, right? Then, so debtor of rupees 20,000. So what is debtor basically? So the person from whom we have to recover money, that is known as debtor, right? So anything receivable is my asset. So this debtor is also my asset. Then, so machinery, we are having machinery of rupees 60,000. So machine is also asset. Then 60,000 rupees of machinery, 25,000. Machinery of rupees 60,000, stock of rupees 25,000. See, we are having a stock of rupees 25,000. So that stock, that is also your asset, right? And so capital of rupees 75,000 is there. So what we have to calculate here? So we have to calculate here liability, right? So we can calculate liability. So first of all the assets we have to club together, we have to add together. So assets like cash is there. So I will be considering cash plus debtor plus machinery plus stock, right, is equal to, so capital is how much? So capital is 75,000 plus liabilities, so that we don't know, right? So capital is how much? So capital is 75,000. So I need to put now amounts. So cash is rupees 5,000. So debtor is rupees 20,000 plus machinery is how much? So machinery is 60,000 rupees. Then so stock is how much? So stock is 25,000, right? Is equal to, so capital is how much? So capital is 75,000 plus liability, so that we don't know, that we have to find out, right? So what is total of the asset here? So therefore total of the asset is 1,10,000 rupees, right? 1,10,000 is equal to 75,000 rupees plus liability, right? So what will be the answer of liability? So therefore liability of your business is equal to 1,10,000 rupees of asset minus 75,000 of your capital. So 1,10,000 minus 75,000 rupees. So that will be answer for your liability, and answer is rupees 35,000, right? So with the help of accounting equation, sir, we can easily find out capital of your business or liability of your business or asset of the business, because it's an equation, right? If you know asset value, if you know liability value, then you can calculate capital. If you know asset and capital, you can calculate liability. If you know liability capital, you can find out asset, right? So this is the equation. With the help of equation, we can easily find out the asset, liability and capital of the business. Now we have to see the next question regarding your accounting equation. So by solving this question on accounting equation, the rules of debit and credit will help us, right? As we know, when asset or liability increases, what we have to do, debit or credit. Similarly, when your income expense decrease, what we have to do, debit or credit, right? So rules of debit and credit are there, an accounting equation formula is there, or that equation is there, that will help you in solving this question. So what will be the effect of the following on accounting equation? So purchase goods for rupees 20,000. Purchase goods of rupees 20,000 from Mahesh on a credit. So business or company purchased 20,000 rupees of goods, right, from Mahesh on a credit basis. So that 20,000 rupees of goods comes into the business, right? So that 20,000 rupees of goods is nothing but the stock for the business, and stock is always an asset, right? So I can say my stock will get increase when you purchase 20,000 rupees of goods, then your stock will get increase or not. But obviously, so stock will get increase. So stock is asset. So 20,000 rupees of asset will be there, or stock will get increased by rupees 20,000. But sir, you have purchased this stock or goods on a credit basis. You have to pay this 20,000 rupees to Mahesh, right? After some period of time. So it means when you purchase goods, your asset, your stock get increased by rupees 20,000. In line with that, sir, your liability will also get increased, right? Because you have to pay. So if your asset get increased by rupees 20,000, similarly, so your liability will also get increased by rupees 20,000. Sir, is there any change in capital? So there is no effect on the capital. So capital will be nil. So if you observe here, so accounting equation will get satisfied. That is, asset is equal to liability plus capital, 20,000 and 20,000 rupees. Getting? Then So next transaction, this is the first transaction that we discussed. So next transaction is regarding sold goods to Suresh costing rupees 8,000 for rupees 10,000 in cash. Sir, if you observe here, you have sold out goods to Suresh. And cost of the goods is how much? So cost of the goods is 8,000. So first of all, after reading these, I understand I have sold out goods costing rupees 8,000, right? So stock of rupees 8,000 is no longer with me, right? So stock of rupees 8,000 goes out of the business. So asset goes out of the business. Asset get decreased. So we have to subtract the same, right? We have to decrease the asset, right? So whatever asset is there, so that asset we have to decrease. So see, previously I can say your asset were 20,000 rupees. Previously your asset were 20,000 rupees. Now your asset get decreased by how much? Your asset get decreased by rupees 8,000, right? So what will be the answer? Final answer for your asset. So final answer for your asset is, for example, 20,000 minus 8,000. So far you are having 12,000 rupees of asset with you, right? Then further, they sold out these goods for a cash of rupees 10,000 and you have earned 10,000 rupees of cash, right? So you managed to earn 10,000 rupees of cash. So cash comes into the business. So cash is also asset, right? So one asset, that is stock, is going out of the business, so that we subtracted, that we decrease. So what about cash? So cash is coming into the business. So another asset get increased, so cash will get increased. So we have to add here 20,000, 10,000, 20,000 minus 8,000 plus 10,000 rupees of cash get increased. We are discussing here transaction number 2, right? So final answer of cash is how much? Final answer of asset is how much? So final answer regarding your asset is 22,000 rupees, right? So because of this transaction, is there an impact on your liability and your capital, right? So yes, if we discuss, so this 22,000 is my asset. Now we have to discuss about what is impact on liability and what is impact on capital, right? So we sold out these goods on a credit basis or cash basis. So on a cash basis, we managed to get 10,000 rupees. So there is a no increase decrease regarding my liability. So my liability will be 20,000 only, right? My liability will be 20,000 only. So what about my capital? Sir, if you observe here, 8,000 rupees of goods you have sold for rupees 10,000. It means you managed to earn here 2,000 rupees of profit. And so what is concept? So concept is simple. Whenever you earn a profit, whenever you suffered a loss, whenever you incurred expenses, and whenever you earn an income, so that is having impact on your capital, but obviously, right? So because of profit, your capital will get increased. Because of loss, your capital will get decreased. So because of expenses, your capital will get decreased. And because of income, your capital will get increased, right? So this is the simple concept that we have to apply here. So 2,000 rupees of profit, because of that, so my capital will get increased by rupees 2,000. Now, if you observe here, so my asset total is 22,000 and my liability plus capital total is also 22,000 rupees. So my accounting equation get satisfied. Then, so third one. So what is third transaction? So third transaction is paid wages of rupees 500. So we paid wages of rupees 500. So when you paid wages of rupees 500, your cash of rupees 500 goes out of the business, right? So cash comes down. So 22,000 rupees of cash was there. Now cash decreases by rupees 500. It means, so 22,000 minus 500 rupees. So you are having now a cash of rupees 21,500. You are having 21,500 rupees of cash with you, right? And so what about your liability and your capital? What about liability and capital? So there will be no increase decrease in liability as such because you paid wages. So the liability of rupees 20,000 will be as it is plus. So what about capital? So as we discussed, whenever there is expenses, so your capital will get decreased. 2,000 rupees of capital were previously and now. So because of this, your capital will get decreased by rupees 500. So total of capital is 1,500 rupees. Now if you see the accounting equation here 21,500 rupees of your asset, and by adding the liability plus capital, you will be getting same answer, 21,500 rupees, right? Then, so next is regarding your fourth transaction. So withdraw in cash for a private use rupees 2,000. So the owner of the business, he withdraws 2,000 rupees for a personal purpose. And so that we know drawings, right? It is known as drawings. So 2,000 rupees goes out of the business. So if 2,000 rupees goes out of the business, your asset will come down. So here from 21,500 rupees of your cash, I need to decrease 2,000 rupees, right? So what will be the final answer? So final answer is 19,500 rupees of asset with us, right? Then, so what will be the impact on your liability? Is there an impact on liability? No, sir. There will be no impact on liability. So liability will remain as it is. Okay. So what will be the liability? So liability will be 20,000 rupees. But if you discuss about your capital, so your capital will be negative, right? So your capital will be in negative. That is your 1,500 rupees were a capital previously. Now because of your drawings, so the capital becomes in a negative of rupees 500. So if you see overall, so your overall accounting equation will get matched. 19,500 is equal to 19,500 rupees of liability plus capital. So this plus minus will get minus, right? Right? And the final answer is 19,500 only. Then, so what is impact of the fifth transaction here? So paid to a creditor is rupees 2,000. You have paid 2,000 rupees to your creditor. Now, if you're paying 2,000 rupees to your creditor, your asset will come down, right? So previously your asset were 19,500 rupees minus 2,000. So your answer of your asset is 17,500 rupees, right? Now, so your liability will go down. So your liability will go down by how much? By 2,000 rupees. So previously your liability plus capital were how much? So your liability were capital were 19,500 rupees, and it will come down by rupees 2,000. So you're having a balance of 17,500 with asset as well as with your liability and capital. So the accounting equation proves here that asset of your business is always equal to your liability plus capital, right?